This is Bye Money and welcome to my channel. Thanks for joining me today. And in this video, you will learn how to scalp the E-mini using pure price action. And the price action setup that we will look for is a two-legged pullback. We call this the first pullback, first entry, second pullback, second entry. We like to find this setup in key areas. We can also identify this way, A, B, C. And the next A leg, we would like to enter here, or the second entry. And we like to find this setup in key areas such as support resistance levels, moving averages, and trend lines channels. The reason why this setup is such a powerful setup, or such a high probable setup, is because whenever the market makes two attempts at something, it feels more confident to enter into the second attempt. And so the market will look at the first entry, and they will skip that, and they will feel more confident in the second entry. And this is the same psychology behind double tops and double bottoms. So that's why we like to find this setup in good context. And with good context, this is a greater than 90% chance setup. And if you'd like to know more information about this setup, you can check out the description below. There will be two links there that goes over the details about the two-legged pullback. And when I say price action, that means that I don't use any indicators. But on my screen, you can see a few indicators, but we try to keep this chart as simple as possible. You have the 20 EMA, which is the solid blue line, the 240 SMA, which is this dashed line, and you have a bunch of numbers above and below the candles here. This is an indicator that automatically counts legs and identifies second entries. The second entries are identified by dark red or dark green numbers, and the leg counts you can see just by looking at the numbers. So if you'd like to know more information about the indicator, you can go to the official website at www.twoleggedpullback.com. Alright, that's enough for the introduction. We'll go ahead and jump into the setups for today, and I'll be going over some of the setups that I found to be very good setups for the two-legged pullback. The first setup for us comes in around 9:46 a.m. Eastern Time. We see a two-legged pullback forming here. We can easily identify by this darker red 2, showing that the next candle will break the previous candle's low. But we can also identify this way: A, B, C, and when the candle breaks a previous candle's low, or there's another reversal, on the next reversal, it will be a second entry. Will this be a good second entry to enter into? Will this be a good two-legged pullback? If you saw a two-legged pullback like this, would you enter into this trade? First thing you notice is a very good signal bar. But you also have to see that we have the 20 EMA right here that could act as support. Let's look at more of the context here. We also have a trading range that has been developing over the last several bars. We can see a trading range easily by first finding 3 overlapping bars. We see here that the trading range is already starting to develop right here. 3 overlapping bars, 1, 2, 3. And with these 3 overlapping bars, we'll start to create our trading range. I will show you how this trading range will develop over time. The trading range will first develop like this, and will look like this right here. You can see exactly why this bounced off right here, because it hit the bottom of the trading range. But as the trading range, or as the chart continues to develop, we will continue to extend this trading range. And here we see we have a false or failed breakdown, because it breaks down, comes back into the trading range, and then we see that this tries to come up and hit the top of the trading range, but misses it by 1 tick and then reverses. And at this point, you might be considering this might be the beginning of a downtrend, with a strong bear bar like this. But then all of a sudden, it reverses and comes back into our trading range, so this trading range is still valid. And as we see, we keep extending this trading range. And typically what happens in this scenario is this. Whenever the trading range breaks out, there is a very high chance that the breakout will fail. We already saw that this breakout failed on the lower side, and now we're seeing it start to break out on the upper side. One thing to note is that typically the breakout happens uh, continuing the original trend. Right now, the previous trend before the trading range was a downtrend, and so we did have failed breakdowns going to the downside, but now we're on the upside, and this is starting to become a counter trend breakout. What we would typically look for in this situation is a lower high, but more specifically, a second entry lower high. Notice that there are two types of two-legged pullbacks. Here is one type of two-legged pullback where we would like to enter into the second entry. This is another variant of a two-legged pullback where we like to enter the second entry right here. Do you notice the difference between this one and this one? In this one, the pivot high breaks above the previous pivot high. In this one, the pivot high does not break above the previous pivot high. Yet, it's still considered a second entry or two-legged pullback. Here we have the second variant. As you can see here, I almost drew that perfectly. Almost. So, when this breaks the previous candle's low, we can see that we will enter back into the trading range, expecting to come back in to test the bottom of the trading range. So, would I consider this second entry? I would. This is a good second entry to enter into. So let's see if it makes a point. You can see that it does make a point, and look exactly where this candle stops. It stops right at the bottom of this trading range. It wanted to test there, and we see that people took profits at the bottom of this trading range, that people who are betting on the fact that this will most likely be a failed breakout because going counter trend to the previous trend, and that it will most likely come here and maybe even break through. But they took profits right here at the bottom of this trading range. Hey guys, also let me know if you like this type of chart review. The last couple have been like full feature length movies, me going bar by bar. Let me know if you guys enjoy the bar by bar, or if you like the selective setups. I want to know what's better for you guys. Leave a comment below to let me know what you guys prefer, and yeah, so that helps me a lot to produce content that's best for you guys, and so hopefully that's helpful. The next setup we have here is a second entry short and also a failed second entry long. How is this both in one spot? Well, first off, we have this A, B, C, and this will be a second entry short. But we also have this A, B, C, A, and this A leg actually only goes up one tick, as you can see right here. If I zoom in, you can see that this second entry is only one tick long. And so we have both in one spot a failed second entry long and a second entry short. I'll get rid of the failed second entry long to clear up the chart. Now, if you saw this setup, would you consider this second entry short? First thing you do notice is that we have a very good signal bar for you to go short in. But let's look at the rest of the context before we decide. It is your money on the line, so you want to make sure 100% that this is a good setup. The second thing I will notice, and in my mind personally, prior to even seeing this signal bar, I would have noticed this, is that we have a trading range. But even before this, if you are just looking at your immediate context, you have this trading range. You have 3 overlapping bars, but you can also see this as a trading range as well. You have a swing low, swing high, and another swing low all within itself, all within the range of the first swing low. And so you have this as a range as well, potential trading range. So you have a couple things that can help you recognize that this is begin to become a trading range. You have overlapping bars right here. You have 3 overlapping bars in a row. Not only that, you're all within this swing. Previous swing up, previous swing down are all within this swing here. What that means is that in a higher time frame, or tick frame for this instance, because we're in a 2000 tick chart, that this swing down, this swing up, this will be 1 bar, this will be another bar, and this will be another bar. And so it'll be 3 overlapping bars on a higher time frame. So when we see this, we realize we are in a trading range. Not only that, the previous trend was going up. And so oftentimes what will happen is that there will be a failed breakdown or a failed breakout going counter trend, and that will reverse and will continue to go with the original trend. And so here, if we saw this, even though it's a very good signal bar and a second entry short with a failed second entry long all in one spot, this trade is actually not a particular good trade to take. I would not consider taking this trade. So I would mark this with a red triangle. And let's go to the next candle. And what do we find ourselves here? We find ourselves here now. Extend this to make sure we're not covering any wicks here. Where do we find ourselves bouncing off of? We see now that once the second entry began, it immediately reversed. It went down about 2 ticks, but the previous candle's low, is acting as support, and also the bottom of this trading range is acting as support. Not only that, we just simply have choppiness because of 3 overlapping bars. And so now we find ourselves with another second entry here, but in this case we have a second entry long with a failed second entry short. I'll draw this out for you. We call this the first pullback, first entry, second pullback, and we know the next candle will break a previous candle's high because we see a dark green 3 with a magenta box. We see the dark green 3, the magenta box lets us know it's a trap. It's a trap because we have this first pullback, first entry, second pullback, second entry here, and the second entry only goes 2 ticks. So all in one spot we have both a second entry long and a failed second entry short. I'm going to get rid of the second entry short to clear up some noise. Also, we'll get rid of this, if I can click it. I don't think it's possible. I'll get rid of this, clear up some noise. Now, would you consider this second entry long, failed second entry short? We already have the context set up for us. We have in this case, we're in the bottom of this trading range, and not only that, we have higher lows. We know it's a higher low because we have a 1 here, we have a 2 here, and we have a 3 here. We know that these are higher lows or double bottom because the count continues to go upwards. If any of these pivot lows broke the previous pivot low, then the count will reset. But we know that we haven't reset yet because the count keeps going upwards. Because the count keeps going up, we know that these are higher lows. So we have set up a second entry long, failed second entry short, good signal bar, bottom of a trading range with higher lows. This is a setup you must take. Not only that, when we look in this trading range, we can see, I'll zoom up, we actually have enough room to make a point if we enter here. You would be better off with a small retracement of 1 tick to help ensure your point for the top of this range, which is actually up here. But you do, even without that, have enough room to make a point. And so I'll be interested in this trade. And so let's see what happens with the next candle. Oh, the next 2 candles, let's just say. And boom, we see that in 1 candle, we're able to make our scalp. And not only that, if you had a runner, you would definitely have room for runner because you see here that we have not filled the gap here between this low and this low. So that is a good setup. For the next setup, we see that we have a second entry long setting up here that's a higher low. It's a higher low because of this dark green too. Again, the typical two-legged pullback looks like this with a second entry here, but there's a variant of this which looks like this with a second entry long with a higher pivot low. This is a second variant, as you can see here. If I drag this over here, you can see that we have a two-legged pullback forming here of the second variant where the pivot low does not break the previous pivot low. That's why we have a dark green 2 here instead of a dark green 1. Would you take this second entry? Let's look at the context. We notice here immediately we have bounced off the 240 SMA. So we are in a downtrend. If I were to make a channel here, it would look something like this. And now with this channel, we notice that we have bounced off the bottom edge of this channel. And now we're faced with this. We notice here that we do not have enough room actually to make a point to the top of this trend line. That's something you must consider. Not only that, the 20 EMA, barely enough room to make a point with this 20 EMA in the way. Would you take this second entry knowing that? At this point, it'll be very difficult, I think, to take the second entry. You do have a very good signal bar, and you do have a higher low. However, you have a couple things blocking you from taking this trade. Let me go back to the left here and discover more context to see if that's helpful. I will make this channel here very close here. Let's keep going back to see if we can find more context here. This is why I have 30 days worth of data to load. I made a channel from this high to this low. To make a channel, simply, if you're in a downtrend, you connect two pivot highs that when connected intersect no other points. And then to make the channel, you make a parallel line that connects a pivot low between the two pivot highs that when connected, it will not intersect any other points between those two pivot highs. So we have this major channel right here. And if I go back, this green line is the beginning of today's trading, regular trading hours at 9:30 Eastern Time. Where do we find our context here? We notice that with this channel, we have decisively reversed off the bottom of this channel. Notice I made this channel way before any of this information was given to us, yet it gave us valuable information right now, forward-looking information. And we notice that it bounced off the bottom of this channel and reversed with conviction. And it hit its head on the 240 SMA to give us a pullback. But the moment I see this, I would start to look for a major trend reversal. So I will be looking for some sort of double bottom. We can see here that we also have a trading range that had developed with these overlapping bars. I'll extend it to the right, and I'm using the top and bottom of the bodies to make this channel, or this trading range. And so right now we are hunting for a double bottom because we saw a strong reversal up, and so we want to come in with the double bottom. And this is where we find ourselves right now. I kind of revealed what happened, but as you will be able to guess soon, I am interested in this trade. we see that if we extend this trading range here from way back here to right here, we noticed that we bounced off, we found support at the top of the trading range. Good signal bar, the good reaction, good follow through. But typically when we look for double bottoms, we want to enter into the higher low. And so the market has graced us, has given us a gift here with a good signal bar with a higher low, bouncing off the bottom of this trading range when we're looking for a double bottom. And so here, I would enter long. And this might be a position you might want to swing for a very long time because we're looking for a double bottom. So here, even though you have these things in the way, I think it's very worth it if you were going to swing here. Not only scalp, but have a swing. So I'm going to mark this as a good trade. And you can see here, it makes your point immediately. And then if you had a runner, you would have been stopped out right here. But if you had a swing trade, you would have your stop still down here, ready for your swing, could be 2x. And we can see from there on, the market never sees this again. That's it for today's chart review. I hope that's been helpful for you. And if it's been helpful for you, remember to hit that like and subscribe button. That helps us out a lot. That helps this channel out a lot. And it's one of the best things you can do. If you really, really love this channel, share the link with a friend. Let them know that this content's out there, that they can learn what a two-legged pullback is and how to read some price action. So I hope that's helpful for you. And as always, happy trading and God bless.